All right, I've said it before. I'm going to say it again tonight. If it ain't broke, don't fix it. President Biden's massive spending initiatives, unnecessary, potentially damaging. They might wind up hurting the economy. But anyway, the stock market is booming. Whatever I think about life, liberty, and the pursuit of happiness, stocks are booming. It's very bullish. And I got to ask our next two guests what they think about that. How much longevity is there? Joining us, Ed Yardeni, president of Yardeni Research, and Rebecca Walser, president and CEO of Walser Wealth Management. Welcome back to both of you. Ed Yardeni, at the top of the show, our friend Art Laffer suggested that the stimulus packages and the government spending, I call it stimmy, is the primary driving factor behind the bull market in stocks. And if the stimmy goes away, the bull market goes away. What you think?
Well, the bull market's been around since 2009, and we didn't have stimmy during that entire period, or most of that period. We had an economy that was growing. Employment continued to improve. As you know, we had almost a record boom in the labor market by 2019, before the pandemic and before all the stimulus. I agree, we don't really need any more. The economy is hot, it's red hot, and we don't want to overheat it much more than it is already. But the bull market's been driven by earnings, and earnings have been driven by a fundamentally strong economy.
Rebecca, what's your outlook? You've heard Dr. Yardeni. Still, the economy is strong. The Fed is pumping. I mean, an old adage is don't fight the Fed. I don't know about the stimmy part. I could do without the infrastructure spending. Most of the stimmy has helped China, by the way, as well as the U.S. What do you think, Rebecca? How long does this bull go?
You know, based on what happened last year, Larry, what I would say is that I think that the ARP that got passed in March is going to last us through the end of the second quarter, which I know sounds not great. The funding itself, the $300 bump up federally, is supposed to last through the end of September 6th, specifically Labor Day. But I still don't see the stimulus in and of itself unless the economy continues to organically reopen, Larry, and people really do go back to work. Then this is why you have Biden coming in, one of many reasons, and saying, let's have this huge, $2.3 billion infrastructure project, of which only 6% is actually going to infrastructure, so that if they're slow walking the recovery still because of variant strands or whatever, they still have enough stimulus plan to keep this economy going, because it is going to struggle if we don't get reopened.
Ed, do you think that there's another stimulus package coming? I just find that beyond the pale, but I've seen stranger things in the last year.
I hope not. I agree that there's enough stimulus in the system right now. You know, I'm not a big fan of watching the monetary aggregates. In other words, I'm not a monetarist, but I've never seen anything like it. M2 is up $4.2 trillion on a year-over-year basis. There's an enormous amount of liquidity that's piled up over the past year from the fact that all the stimulus that's been thrown at the economy, a lot of it hasn't been spent. Some of it's actually been used to pay off debt, but there's a tremendous amount just sitting there in liquid assets that's going to continue to pour into the economy, continue to pour into the stock market. My biggest worry, well, I got a few big worries. One is that if they keep stimulating, we'll get more inflation, but we're running out of labor. I mean, it's insane, but surveys of businesses are saying they can't find workers. So how are we going to have an infrastructure spending program in an economy where already the labor market's very tight? And Larry, as you know, part of that is because a lot of people can make more money on unemployment than going back to work. So, you know, the government's here to help and is making a mess of things.
Ed, real quick, 15 seconds. Profits are important. Profits in the mother's milk stock.
Absolutely.
Now, Washington hates profits, but the stock market loves profits.
Absolutely, and rightly so. Profits is really what drives the economy. I'm a big believer that profits is what causes companies to expand. When they don't have the profits, they contract. So all the more reason to feed them, do everything you can to allow them to grow.
All right. Ed Yardeni, Rebecca Walser, thanks to both of you. Very realistic.